Welcome, my name is Mike and welcome to my webinar of ABC123. So the ABC123 Trader, the reason why I designed this webinar for you guys today is so you could understand, it doesn't matter if you're a junior trader or an experienced trader, that I want to just express some of the wisdom that I have created for the past 5 years and show you some of the indicators to pinpoint entries and exits. Before we start, I'll just keep quiet here, and what I'll do is so you can look at the risk disclaimer, because I guess whatever the laws are is I have to show this is for educational purposes only, and such that any advice I give you is for education, and you know trading is very risky and you'll have to, I guess, figure it out yourself, they say. But with that being said, we'll get into this webinar and I will show you some of the stuff that I have learned over the past 5 years. Okay, so the main objective for ABC123 Trader and in this webinar, the goals are the following. What I want to do is, my goal is to assist you in your quest for financial freedom to trade consistently. Number 2 is my goal is to assist you be presenting in what I have learned in the past 5 years. And lastly, my goal is to expose what the institutions or the market makers are doing to skew the game for their financial benefit. Once you start looking into Pandora's box, you'll find for sure the market is always against you, but if you do have the right tools or the intuition, you can actually stay ahead of the game. So this is an example of some of my ABC123 software. It's just a simple chart, and what I want to show you is, like, it looks like a basic chart. You have some color codes there, you have some blue bars, you have, looks like they can say MACD or whatever, and all this, it looks like a whole bunch of different things for the experienced traders or new traders. And we also have some timestamps up on the top and on the below. So the software I've created, actually I have created software that does, I'm a Fibonacci guy, so I like Fibonacci. I like data mining. Those are the two main things that I like to do. And between data mining, like how Facebook data mines us or Google data mines us, I like to data mine the market. That's one of the things I like to do. The other thing is there are so many things you have to look for, is volume, price, and time. Those are the three main things they talk about. But when you're looking at a basic system, you're trying to wonder, says, well, what are all these colors are? What are these timestamps? What are these waves means? Background red colors, etc. And we'll get a little bit deeper into some of the indicators, but what I look for, the steps, what I look for to become a consistent trader. So the very first thing I try to do, first and foremost, after all this time of back testing and trading and doing winning days and of course losing days, is what I want to do is identify the market maker lines. And what the market maker lines are support and resistance line that I strongly believe that if you identify these lines, you will know where the market makers, where they want to go, or how could I say this? It's kind of like this is their targets. So once you identify those target levels, you can enter a trade going long or short and hit these levels. Once you get to those levels, you can close your trade, see what happens, and then continue on. What you'll notice is where in this zone right here, from this yellow line to the green line, see how it vibrates and oscillates. And then it goes back to the yellow line, vibrates and oscillates. Comes back down to this green line, vibrates, oscillates, and then gets to the next level, vibrates. And as you can see where they're tapping up and down, up and down, I strongly believe these are the market maker lines. So I created an indicator so we can slowly but surely, day after day, record these lines. So we don't have to repaint, redraw. If we, delete the software, not delete the software, but your chart, something happens, you don't have to keep on changing it. But that's, I think, is one of the first things in trading. Minus, I'm not going to get into the risk versus reward. I'm not going to talk about money management, and that's actually more important than anything else. If you could do money management and risk reward, you're already halfway there. From that point forward, then we get into the trading side. But when you identify the market maker lines, then I'll go to the next phase. When I'm trading, I always try to find the overnight range. Because when I find the overnight range from the high and the low of the whole sessions before I start trading, I can project ahead of time where they're probably, same as like the institutional lines, where they want to go. And because Fibonacci is so strong in the trading market, I created the extension lines of course, the 127, 141, 161, etc., etc. And I can use these for ultimate targets. Once it gets to that one level, I will reassess to see if the market is going to continue or reverse. It's very, very strong for or recording the overnight range. Thirdly, after 5 years of trading, what is the trend? Is it going up or down? Now, it sounds simple, but even myself, I thought I was going to be a counter trend trader. And I find out, myself personally, it's not even worth it. Yeah, you can make a quick buck here or there once in a while. But on the long term, thinking that you're going to get the right whip out and keep on getting, knocked out, it's not worth it. So once you identify if it's the trend, and of course you always want to get early enough in the trend, just follow the odds. Because we'd rather take a nice long easy trend going up than always trying to fight these zigzags going down for the next whip, thinking you're at the top or here, and then you're at the top here, and then it comes back at you. It's not even worth it. And so I created, there's a few indicators that will tell you what side you're on the trend, such as the trend cloud or the day trend indicator. I also have Ichimoku systems and everything like that. Number 4, which is very, very important, and I should actually put this up earlier before the institution line on the very first slide, but where are we on the cycle? Now, what I do is I do a top-down approach, and I look from weekly bars, daily bars, and this chart is a daily bar, and I want to know what type of the cycle. So I have an indicator which I call the swing scanner, and what I try to identify in time is when the trend is going to change. And if it doesn't change the correct way, we're in an inverted cycle. During our crisis, when the COVID initially started, if you can see in the very top left-hand corner, I had a timestamp stating it was going to be a sell-off, which it actually happened. But because COVID was so strong, I thought it was going to buy back, and it kept on going down. By the time this cycle finished, it inverted to a sell cycle to a buy, and then the pattern, as you can see, majority of the time was working properly. So on the sell side, it went down. On the buy side, it went up. On the sell side, we hit a new inversion, which I thought was quite interesting just before this political season. So what I use this for is to create a bias for, is there going to be more selling days or buying days during each cycle? The power of 21. I kept this from an old webinar that I did with NinjaTrader, and the reason why I wanted to keep this especially is to show you a little bit about the rigging of the system. Most trading software out there are by robots, or the hedge fund managers. There's so many bots out there, and computers trading against computers. What I have done is I was curious about the pullbacks, and I'm a pullback trader. You want to get in within the pullback, get a deeper retracement, hopefully at the right area of entry, and you want to continue on. And so what this example represents, it represents a uni-wrinkle bar, size 10, and a reversal of 48 ticks. So the long bar is 48 ticks long, and the regular bar, if there's no pullback, is 10 ticks, or 10 tick bar. And I stepped it 1 tick at a time. So what you'll see is the little wicks that are pointing where the arrows are, and there's some that I missed there, but that you see those wicks there is what I started to record. I wanted to know what the pullback. And the interesting thing about the pullback is I created a chart on these pullbacks, and what I've noticed is if you look at the number 1 on the very top, it says number 1, 172. Within those few weeks, on whatever the indice I was checking on, and I think this is the NQ right here, it came back 172 times 1 tick back. So if this is a 10 tick bar, means it pulled back 11 ticks before it turned around for continuation. So number 2 would be 12 ticks back, number 3 would be 13 ticks back, 14, 15, 16, 17, 18, 19, 20, 21. And what I've noticed, it didn't matter what instrument I was trading, if it was RTY, CL, GC, YM, currencies, cryptos, it didn't matter. I noticed the number 11 right across the board, and if I had a bell chart, was the highest number for retracement. Out of this whole webinar, if you've instilled that in your head, thinking of 21, I'll say 21 to 24 ticks is a really, really good sweet spot. So this would be 21, 22, 23, 24, somewhere within this zone. If it's coming back for a pullback and you want to go 21 to 24 ticks, minimize your risk for maximize your reward. It's like a golf swing. You hit the sweet spot. Okay? So my question is why 524 times? Why 20 times on this indice? 43. This was oil, this was gold, this was YM, and this was RTY, if I recall. But why always at 21? And the only logical conclusion I could figure out, and I still think it's logical because I've tested it a number of times, that at 21 ticks, if we put a 20 tick stop loss on the cheaper indices as a $100 loss, on oil it would be $210, I guess. So on one contract. And that's all I could think why it was doing that. The robots, yeah, the robots are hitting it that way. So when I do that, understanding that logic, what I do is I start doing a top-down approach. So when I look, like I said before when I showed the indicator earlier, what I wanted to know is where I am in the cycle on the longer term frame. So if I'm earlier, I would be expecting to go down or up or whatever, and this line, it would be kind of the sweet spot, seeing which direction to go to. Then what I'll do is I'll go into a 15-minute chart or a 30-minute chart, and what I'll look is I'll check what the London session is happening, and this is the first 3 boxes here are the London session. Second 3 boxes would be our current trading day. And then if we break the white box here, I would go long, come back in, wait and see until I can get to the other side of the trade. Then, as I showed before, I'm just showing trend cloud today. But what we have is I'm showing the fib extension and the trend cloud, to showing you if you had everything set up properly and you're trading and you're following the right side of the trade. See, as we showed you, we already had the 121 extension hit it right on the money before it came back. So these little tidbits of knowledge can help you. And what you'll notice as well, even with the the Fibonacci's and everything, just the simple things, is you can trade, hit targets, shut her down for today, and look how it comes back on 50% retracement. Tries it again before it starts failing to the trend to the sell side. What I also have on this chart that I didn't really talk about, but about the data mining, is we have timestamps. So you can see 7:40 in the morning, I told you to sell, and so you would have made some money. 8:05 said buy. It did go up for a few minutes and finally failed. But what the key is using the timestamps is once you're on the right side of the trade, you want to take the selling opportunities below with the trend. As you can see, it moves. And then the buying opportunities are basically where the market makers are cashing in. So here, 9 o'clock, we take a run. This is morning open. Hits to 10:15, now it's starting to sell off. 11 o'clock was the holding time, 11:45 sell off, 12 o'clock holding time, 12:35 sell off. And as you can see, there are times ahead, so you know exactly what the market makers were planning to do. That's the data mining part. So now what I want to show you is, after the 5 years of trading, these are my indicators I have written. Some I have for free, and others, of course, you have to buy for, or you have to purchase. And as you can see, I have a lot, many. I have to check. I don't even know how many I have anymore that I have written. And of course, I don't use all of them, except for Itchy and Scratchy. I gotta delete that one. That was a test one. It's kind of funny. But what I want to show you is it doesn't matter what type of trader you are, and once you start understanding the basics, which I just want to show you in this webinar today, you can test drive our indicators. And what I'm going to be doing is I'm going to be sending out a link after this video that you're allowed to test drive it. I'm only going to give it for 7 days, not 14. I actually had it for 45 when I first opened up, so you guys can try everything out. And what I'm going to be doing is, we have many different indicators out there, depending what type of trader you are, from 915 ATR zones, which is really good. It was from a trader named Isham that showed me. Baseline indicator is one of my main ones. You can use the bounce back, which I was talking about. It's basically about the 21 tick theory. We have the energy indicator, Fib predictor, high volume delta, IntelliScan, institutional lines, which I'm going to be changed to market maker lines. If you're Ichimoku fan, and I'll give you an example here. I'm going to add the Ichimoku. Let me just add this. Oh yeah, let me shrink the screen a little bit so I can actually add it. Okay. Once I add that one and hit apply, I'm gonna have to switch this to let's go to a 1 minute chart here. I created an Ichimoku system that has about 4 or 5 different types of logic in there. It actually tells you the roadmap of how confident I feel where this trade, or where we are trading. Right now we're in consolidation, but with the Ichimoku system, my day trend is saying we're already in the selling phase. And this is one of the earliest phases that actually we're looking for the market to go down, because we're within the Fibonacci 60% zone. Even though Leap Tracker, everything else is going to the upside, we did break the cloud. But this is the earliest sign for I won't say counter trend trade, because we're kind of above the Leap Tracker, so it's kind of an iffy area. But once we break down, I'll be looking for to look for lower areas of interest. Or, for example, let's say I get rid of just the basic and just use the basic Leap Tracker system. I'll add the institution line to it. Now, the basic Leap Tracker system only has 4 phases of logic that I'm trying to recommend. That's saying we're actually uptrending right now. We're just switching to a downtrend, but on the longer term we're still going up, and this is a retracement value. And what this happens are areas of interest where they're saying it's a possibility of a turnaround here. So we ended up, like as you can see the high spike here, we ended up with a triangle saying we might be going down. A little more of a confirmation we're going down. Let us do this retracement pullback. But the key is once we break this line, this is our area of interest to go short. Because this is what I call my original institution line. As you can see, where it was vibrating today, and then we had the triangle, which is number 3, to say go for it, and the way we took off there. Like I said, I have spent 5 years creating indicators for myself, and I do have clients out there that use these indicators, and my mission is to hopefully get for other traders to be consistent in trading, so they can pinpoint their trades and trade safe. I will, after this video, I will send a link of where you can do a trial for 7 days. I'm going to put it out there. And thank you very much for watching this video. My name is Mike. You take care, and you have a great day. Bye.